is Huskins from the Forex Training Professionals reporting on the trade um, result of the trade alert issued on the 18th of August 2010. At 12 around 12 noon, we issued an alert to sell the USDACD at 1.0326 with a 50 pip stop loss and a 100 plus pip target. Let's see how that trade turned up. We did not get a fill for a very long time and got entered right at our 1.0326. It turned out to be a beautiful entry level because the price turned around exactly from the position where we'd suggested it would, and it tried to move in our direction. However, it did not. We first penetrated above the mental stop loss level at 1.036 out here, and at that time we did see some kind of a reversal pattern, so I held on to my trade position. However, once it made a second attempt above the 1.0376, it closed out there and it went even higher than that. That's when I decided to get out of my position at a 55 pip loss. So now, normally when I have a loss, I do not think it's a bad trade. That's just a part of being in the business. However, in this particular instance, I went through my notes and I found out that we did have, in fact, a bad trade. I'll give you my reasons why. If you've gone through my video on why I got into this trade in the first place, I got into this trade based on the 5-minute chart, wherein we'd made a nice low, and I expected price to retrace and try and attempt to make another low. Let's see whether it actually did that. The price did try to retrace and it did try to make another low. So our analysis on the 5-minute was correct. Once this low was met, I should have cancelled my alert to get in short at this particular price. That's number one. The number two is on the 60-minute time frame, we had a trend line, and one of my logic for this particular trend for the trade was that we were drawing an evening star on a downward sloping trend line. So that is a bearish signal. Again, we broke through that trend line. We broke through that trend line and we stayed pretty much for a considerable amount of time on the other side of the trend line before we made another dip down. So the 1 hour analysis which would have made us get into a trade was no longer true. So all in all, the trade was a perfect trade. However, the trade time for which I had kept the orders active was too long. I should have cancelled my orders within 12 hours, which would be within this trend line, and we would have then saved ourselves from this 55 pip loss. I hope that helps, and thank you so much for watching in.